Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. I just wanted to let you know that before we start, that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. Okay, so just to remind you once more, and it's a timely reminder given what has happened for 8 weeks ago, as I've said here repeatedly in this commentary, for months and months, the most significant feature of this market has been the key lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24, and I suppose also the congestion this year in January, February, late April, May, early June, and the high 9 weeks ago, plus the recent move higher 3 weeks ago, and also last week. In recent days, all up to test and halt at the overhead gold long moving average, currently 15,470. I'd also add to this that for many months I've also highlighted how the higher 15,840 level, along with the low for 2021 at 15,665, was and is also still a key level. So, just below the market, we also have the significant yet broken upper time, currently at 15,008 of the early October 24 to mid-March 25 bearish shift pitch hawk. A key and now possibly a former showrunner for this market here this year. This break higher over this upper time seems now to be stabilizing, if not causing a strong move higher. The other feature to watch out for is the 50% Fibonacci line for 2025 at 15,325, just above the market. Last week we tried stabilizing over this, but as I said last week, and I quote, in which case the gold long moving average would be under real threat, end of quote. Well, the gold long moving average was up to that threat and pushed prices down as far today as just below the flatline in green short medium moving average, currently at 15,225. This green short medium moving average has acted as a sort of support in recent weeks, so please be aware of that. So overall, we have, as I've repeatedly said before, looking at them all together, some of these are some pretty heavy duty resistances which have earlier capped the market. And as I said 2 weeks ago, as a consequence, and I quote, all this action nevertheless suggested to me a new pattern emerging, a late May to date rectangle pattern, currently 14,935 to 15,665. That level again showing up at there, 15,665. The action since late May fits this sort of pattern fits this pattern, and I'm inclined to now call it a new pattern and one we are working our way through, end of quote. Well, this once more seems to be the situation we are in right now. Nothing's changed since last week or the week before on that one. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, old dark blue May to August 2023 bullish shift pitch hawk that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines, which are currently 30.47 and 28.82 respectively. This one still will not die. Even when I thought 22 weeks ago that had finally expired, it still came back like a high-functioning zombie, influencing and impacting the market, especially the dark blue lower time below, currently at 27.17, more recently the dark blue middle time. Separate to this, we recently had the slowly declining gold long moving average, currently at 28.03 as resistance during July and August. But with the market moving higher, this is now support, though a little below current levels. I also said 12 weeks ago, and I quote, I'd keep an eye upon the green short medium moving average, currently 28.24, and medium moving average, currently 27.62, plus what I suspect may be a key level, the 50% Fibonacci line for the whole March to April move at 27.55. This is not the whole of the 2025 action, just the whole of the major move in the last few months. End of quote. These three had 3 weeks ago, and also in late July and early August, acted as a base of action for the latest sweep higher. Though with the move higher last week, the 50% Fibonacci line is now at 27.59. Yet over all of this, please remember the words I said 10 weeks ago, and I quote, "So we are finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So, is it a basing action for a possible future attempt higher, back up to the broken dark blue upper tine, or is it a hesitation, a somewhat large hesitation, with potential down to the 2310 zone? Right now it's not easy to say which, but I would keep an eye on the following: the short, medium and medium moving averages, and the 50% Fibonacci line at 27.55. As I said earlier, that's now 27.59. I continued, they all have given a clue to a somewhat bearish future, but this has been countered by the big old broken dark blue lower tine, which is still here. End of quote. Yes, the big old dark blue lower tine lit the fuse in early and mid-July for the latest attempt higher, only to have in late May and early August the then combined overhead gold long moving average and dark blue middle tine drop a whole load of sand on it to try and extinguish the bullish incentive. However, this did not happen, and prices have managed to push up beyond the dark blue middle tine, as well as the highs seen back in late July and August 2021 at 29.05 and 29.17 respectively, and make a new high this year at 30.04, higher than the previous March high at 29.94.5. Beyond this, well, we have highs in late December last year between 30.53 to 30.61, but I think that might have been formed back then by the declining green short medium moving average back in December last year, so I would be cautious about it. Plus, of course, the dark blue upper tines there, but we realistically have the next significant resistance at the neckline extension of the September to December 2022 reverse head and shoulders pattern, which is currently at 31.13. which is quite a distance above. So it all depends if prices revert back upwards after last week's fall and manage to establish themselves over the previous March high. LME 3-month tin. Okay, so the big picture here continues to be focused on the dark blue late November 24 to mid-April 25 bullish shift pitch walk. We're once again in between the lower time below, currently at 31.070, and the middle tine above, currently at 35.885. In truth, we are once again a little bit under the middle tine. Now, as I've said here many times before, much like some of the other metals I've discussed here today, there are a number of patterns here affecting the market all at the same time. So from the bottom upwards, we have the low of April and 2025 so far at 28.925, just below the July 2011 high at 29.005. Now, I know these are a long way down, but it's best to make note of them than not. Next, we have the slowly rising long moving average, currently at 32.460, and the closer support from the mauve medium moving average, currently 33.290, and even nearer green highlighted short medium moving average, currently at 33.925. That alternates between being support on one hand and possibly resistance on the other hand, and this one to my mind is just still suspect. Then there's the neckline extension, currently at 32.860 of the April 24 head and shoulders continuation pattern. This has been a resistance in the past, but is now support, as we saw back in July. Now, looking closer to the market, what 6 weeks ago was resistance and is now support is the small but significant congestion of the previous all-time high back in April 2011 at 33.605, and the close of it at close to it 50% Fibonacci line for the whole of 2025 so far at 33.660. These two had previously interfered with the market actions, and that is to be remembered. Closer still, and penetrating on the upside 4 weeks ago, but late 2 weeks ago, and again last week and this week, we've seen the market push down through it, though not really stabilize either above or below it, and that is the next 50% Fibonacci line, this time for the March to October 22 move at 34.175. Now looking overhead, we had a trio of close-in resistances which are now reduced to only a pair, as they have continued separating apart. They are the dark blue middle tie, currently at 35,855, and the bright red neckline extension, currently 36,125, of the August to November 2024 head and shoulders top. Finally, I'd add a new pattern here that has been in operation since mid-June, and one that utilizes possibly two of the previously mentioned resistances. It's a June to date bull channel, with the purple lower bull channel line currently at 33,355, just above the rising mode medium moving average right now, and an upper bull channel line that can be either the overhead dark blue middle tine or the bright red neckline. At the moment, I am more inclined to look at the bright red neckline, but I will take either. So overall, I continue watching the gradual guidance higher of the dark blue bullish shift edge hawk, and a closer look at this new mid-June to date bull channel.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.